All right, welcome back. I'm back, and so is the RBI. And today, let's get random but interesting on some of the hottest topics around that is climate change, emissions, and electric cars. They kind of all go together, and money sort of holds them all together. Of course, money is a huge part of the Biden climate and healthcare spending package that we just signed into law. Hundreds of billions of dollars for lower emissions energy sources. That is some good news, especially when you layer on that even before the bill was passed, many were predicting a pretty steep drop in carbon emissions. Take Goldman Sachs, for example. A recent report says they saw a drop of about 37% for carbon emissions over the next 10 to 15 years. That's before the law was passed. And while that is still below President Biden's goal of a 50% drop, it would still be pretty good. Here's how Goldman sees it playing out. The steepest drop comes from that blue line at the bottom, which is emissions from coal, effectively going to zero. Natural gas stays high on the bottom, rather. But gasoline emissions, which is the middle part of that chart, there's a lot going on there, folks, goes down because a big part of the emissions drop estimates is expectations that electric car sales really boom in years to come. Goldman's auto analysts recently raised their forecast to 6 million electric vehicles sold in America from 2025 to 2030. It's about 1.2 million per year. That would be about 7% of every car and truck sold in America. It's not great, but it's not terrible. But is even that estimate at risk? Well, very quietly tucked away in the Inflation Reduction Act is a provision that kills the $7,500 tax credit for certain EVs, depending on their price points and cars that are made mostly outside of the United States. It is hard to believe, but it is true. Now, it's designed to be probably a carrot or maybe a stick for the foreign car makers to bring more production to America and also to boost sales of American-made electric vehicles. But here's the problem right now. Many U.S.-made EVs are now too expensive to be covered under that tax credit. They cost more than $80,000. That's the cutoff. Mineral prices, of course, have surged in recent years. Now, right now, most electric vehicle buyers tend to be more well off. So will this tax credit going away really matter? Well, there's only one way to find out. We asked you in a Twitter poll earlier this week if losing that $7,500 credit would impact either the EV you buy or whether you buy an electric car at all. And holy tailpipes, Batman, look at these responses. 15% of you said the loss of the credit won't matter at all. That's good news. You'd still buy an electric car. Makes sense. Most EV buyers are higher income. But 15% of you said, yeah, the loss of that credit may change the brand or model of EV you buy. 17% said now you won't buy an EV at all. It may have changed your thinking. But look at the bottom. More than half of you said your next car is going to be gas-powered, regardless of this. Now, I'm not sure that's what Detroit, which is spending hundreds of billions on selling you an entirely new type of car, wants to hear. Now, we do realize that our polls will probably have a selection bias. It's going to be people who follow us or watch CNBC or follow me. But even if that poll is close to how others around America feel, EV sales could have a much harder time than many people think. Even Goldman Sachs, perhaps. Random and hopefully thought-provoking.